the decoding audit reports of the financial creditors for effective CIRP management. This is a subject because here the particularly corporate data, almost all corporate data, they are availing or availed the various loans or advances from the financial institutions and the banks. And whenever they are going to get any loans and advances, the full history of the particular borrower is available with the financial creditors, whether it is a financial institution or the banks. Simply, they don't give the loan. Whatever the financial statements are there, from time to time, stock audit, from time to time, the risk-based internal audit, and from time to time, agency monitoring accounts, all these things from time to time as per the credit policy guidelines of the financial creditor, they will do or they will complete or they will get or they will extract from the corporate data. Suppose one XYZ company is there. They propose to take a loan from State Bank of India. So once they approach, they will collect the full information of the particular the financial creditor. Then only they will give the loan. Otherwise, they don't give the loan. Because it is a public money, they have to safeguard the financial creditors or safeguard the public money, particularly in the banking also. Whatever the funds they are giving to the corporate debtor, that funds belongs to the depositors. So whenever they are giving that particular loan, full information extracted from the corporate data. That's why during CIRP process, most of the data is available with the corporate data, the financial creditor. You need not ask the earlier management. If at all earlier management is not cooperating, the data you can extract from the financial creditor. Suppose you take, for example, I am giving a loan of 1,000 crores to one company. And whatever the correspondence of that particular company with regard to the loan, all are available with the bank in box file. 1, 2, 3, 4, 5, 6, 7, like that. If the corporate data is with me for last 10 years or 15 years, 15 years data is with me. But on account of CIRP, the resolution professionals or interim resolution professionals, they are facing some problem with regard to the information about the corporate data. But that the total information is available with the bankers or financial institutions. You give attention because of why financial creditors? Because once they are giving loan, they will extract all this information. They will extract all this information. Then only they will give the loan. Otherwise, they don't give the loan. They don't give the loan. So that's why if any communication gaps are there with the resolution professional and the corporate data, you please be focused on the financial creditor. The financial creditor is a COC member, or sometimes he is having a high voting right and he is always cooperating. Once you are asking this data, definitely 100% you will get it from the financial creditor. For that, the financial creditor is also conducting various types of audits on that corporate data, along with the other loans also. So all these things are useful for different ways. Suppose you take, for example, valuation report is there. Once the account is turned into bad, bank will value the property, the primary security value, the collateral security value. Whatever the loan provided by the bank, it is a primary security. Whatever the extra security taken, like land or buildings or plant and machinery, that is collateral security. These two securities valuation reports every 3 years, a bank is compulsorily they will complete the valuation certificate. So these valuation certificates are also useful to you, whether the registered valuer who is going to appointed by you, whether he is valuing the high or low or equal, all these things you can compare with the valuation reports of the banks. I am not asking you to take that valuation report. It is gives some insights about the valuation. And once the loan is turned into non-performing asset, definitely the banks they will again do the valuation. Suppose 1 year back only valuation was happened. But after 1 year, the loan turned into non-performing. Immediately, even the 1 year completed, they don't wait up to 3 years. Next year only, they will complete the audit, the valuation report of all values, primary or collateral security, land and buildings or plant and machinery or stocks, whatever it is said. That valuation reports are also instantly available. And this information, you keep it with you. And once you are giving that the valuation assignment to the registered values under IBC, the two values for land and building one, two, the two values, plant and machinery two values, and the business or investment securities valuation two. Compare with the banks, whether he is a high side or low side. Today, what is happening? Some of the corporate data, they are always criticizing. No, my property is this much, 500 crores. But whereas the resolution professional has finalized the resolution plan for 50 crores, which is wrong. They are approaching either NCLAT or NCLT, sometimes or Honorable Supreme Court of India also. So the base is available with your committee member, the committee of creditor. So that's why the audit reports or the financial information about the corporate data, 50% is available with the financial creditors. The remaining 50%, anyhow, you are putting efforts. All these things I will discuss in detail about this decoding audit reports of the financial creditor for effective CIRP management. The success of a CIRP depends heavily on the quality. So in all process, CIRP is a corporate insolvency resolution process. Under this CIRP, sub-processes are there. These sub-processes, each and every process, quality is there, the success rate of CIRP will increase. Reliability. And once the data is reliable, neither the financial creditor nor the operational creditor, they will not criticize you. And the timeliness. So, if at all you are spending a lot of time for extracting the data, that too, the data is readily available 50% with the financial creditor. That too, whenever the COC meetings are there, you are interacting with the committee of creditors. Or if you go to the bank and get full information, some of the RPs, they know that most of the data is available with the bank or financial institution. then they will approach. Being a committee of creditors, definitely they will share the data. So timeliness is very, very important. If at all you are searching, and the data is not available, don't be demotivated. It is available with the COC members on operational information available to the interim resolution or resolution profession. So for lifeline of the CIRP is the flow of data. The flow of data. While the books and records of the corporate data often suffer from deficiencies, manipulation, incomplete documentation, the records maintained by the financial creditors, particularly banks and financial institutions, serve as an independent and a reliable secondary source of information. So, while the books of records and corporate data often suffer from deficiency, partial data is incomplete data, not a full data, manipulation. Some of the data files are manipulated by the corporate data. How you know? Once the data second, the standby or a repository of data is available with the financial creditor, you can compare. And incomplete documentation. And the records maintained by the financial creditor, particularly banks and financial institutions, serve as an independent, reliable, and a secondary source of information. So, secondary source of information, that is the financial creditor, the various audit reports. The banks are also doing some audit of the corporate data during the currency of the loan. Whenever the loan taken by the big companies, lot of audits on the company is also there, indirectly, not directly. What are those, all these things, information I will discuss in detail. Audit reports. Whenever the audits are there, whether it is a stock audit or due diligence audit or a credit audit or agency for special monitoring audit of the corporate, all are available with the financial creditors. Whatever the information gaps are there, you can get it from that particular audit report. Credit monitoring reports. Monthly, they will continuously monitor. Quarterly, quarter 1, quarter 2, quarter 3, quarter 4, the quarterly reports are also audited, financial statements are also available. If at all any missing data is there, first you please interact with the financial creditor. And findings and management information system about the corporate data and generated so by the financial creditor during lifeline of the loan. Life cycle of the loan. The life cycle of the loan. Whenever the loan is taken, some other, particularly as a banker, I know. If the loan is taken 10 years or 15 years back, 15 years back to till date, the total information about that particular company is available with the bank. Once the company is taken a loan from the bank, and every year on account of sales increasing, we are increasing the particular the limits, and if at all he is borrowing from other banks, that information also we will get it. All these things are there by the creditor during the life cycle of the loan provided by chronological third party verified trail of the financial behavior of the corporate data. Once you go through that particular files, different files are there, and scan that one. Okay, you go to that the financial creditor, that is a bank or financial institution. Can I have the life cycle loan file of the particular corporate data? Full information is visible. Thereby, the success rate of CIRP will increase. And the third party verified trial of the financial behavior of the corporate data. These documents are invaluable during the particular CIRP and liquidation. So here the document become, if at all you take that documents, somewhere it is useful for you. Importance of the financial creditor records in CIRP. How this financial creditor information or records during CIRP, how it is useful, how it is important. Financial creditor continuously monitor borrower accounts, correct? Life cycle of the loan. If for the last 20 years they are using the bank, some of the companies from the day one of establishment till date, they are with us. Take for example, Tata. Most of the Tata accounts are with the State Bank of India one. The total file or information about the Tata is available with the State Bank of India. Because whenever we are increasing the loan amount or whenever the continuous process throughout the year, we are asking different information. Some of the information is useful to the resolution professional or interim resolution professional. And monitor the borrower account through statutory requirement, prudential norms of the Reserve Bank of India, and internal risk management framework. As a result, authenticated financial information. Once the banks are collecting the information, they will always insist the audited financial statement. And they will compare with the earlier quarter. Sometimes they will compare with the previous the years also. Independent asset valuation. Today, once it is in CIRP, the resolution profession is engaging the services of the valuers, registered valuers under IBPA for land and buildings, plant and machinery, and the investments. But here, the authenticated, the independent asset valuation, we are giving that valuation to the empaneled valuer with us. Those who are having 30 years experience, 40 years experience in the line of activity. So compare this value with the valuation reports given by the registered valuer under IBPI. Transaction price. How is a transaction? Once he is using the working capital loans, all his sales, all his expenses are routed through the current account or the working capital loan, that is called cash credit. That information is also available with the bank, and the evidence of a diversion and siphoning of funds. Monthly intervals, we are closely monitor the borrower accounts. And monthly intervals, the credit officer, he is going to the unit, whether unit is doing the manufacturing process or not, whether he is doing that particularly the diversion of funds or siphoning of funds, then he will come back to the branch and give the report to the branch head or the top management. While I visited that particular unit, stocks are not available and sales, the directors are not available. It appears that the funds are diverted to other activity like that. And after that also, we will do the forensic audit. Forensic audit is not only in the CIRP. Then CIRP, there is no word of a forensic audit. It is called a transactional audit. So whatever the transactions from time to time, we will verify security documentation. Whatever the loan, land or plant and machinery, whatever the title deeds are there, they will mortgage it to the bank. Under hypothecation or pledge or mortgage, different types of the assignments are there, or Transfer of Property Act, and we will register with the register of the particularly all these particulars we will register with the ROC under section 77 of the Companies Act 2013. For IRP or RP, these records help in reconstructing the financial statement. So the reconstruction, particularly the reconstructing the financial statement. Why reconstructing? Some of the reports, some of the reports, it is not fully information is not available. To reconstruct the particular balance sheet, some additional information is required. That additional information is available with the particular financial creditor. You make a request to the committee of creditors during the meeting. After completion of the meeting, normally under IBC, you ask that particular committee of creditors, sir, I require this information. Do you have that information in your the loan life particular documentation, all this, and detecting avoidance transactions? So diversion of funds or misappropriation of funds, the first person who is identified is not the forensic auditor, not the transaction auditor, that is the bank. Once the funds are diverted or funds are misappropriated, during the monthly visit, he will find out that one. Immediately he will report the report and give it to the management. Thereafter, management will also conduct or issue instruction to conduct the forensic auditors and expediting the information memoranda preparation. So every time I'm telling, to prepare the information memoranda, you need not worry. Whatever the sanction letter, the loan appraisal report is a loan appraisal report. The loan appraisal report, if you see the loan appraisal report of the bankers, the end-to-end information about the company is available. So, what is a type of activity? How long the directors are having experience? What is the DIN numbers? What is the raw material that is used? What is the projected sales? What is the primary security? What is the collateral security? Who is the buyers for this product? How many competitors are there? And what type of a machinery that is to be used? Whenever the unit is going to start any business, they will give detailed project report, DPR. In all these things, this information is available. You need not reconstruct the information. To reconstruct the information, this type of information is readily available with the financial creditors, including banks. Thereby, the information, particularly the information memoranda preparation is very, very, very easy. And statute audit reports of the corporate data. Statute audit, external auditors. External auditors reports are available with if the company is there, the other people they have to audit. So the statutory audit reports of the corporate data and the statutory audit reports are submitted annually by the corporate data to the banks for foundation of financial documentation. These reports include balance sheet, profit and loss account, cash flow, notes to the accounts, auditor qualification, emphasis of the matter. Once the statute audit is completed, then that audit report is also available. That is to be submitted to the banks also to get the funding. To get the funding. So that's the information is not a big task during CIRP process. Somewhere the information is available. You need not worry about the information. So somewhere the information is available. And usefulness in CIRP. How this audit report is, audit reports are useful in CIRP. Statute audit report assists a resolution profession in establishing historical financial performance. How the performance is increasing, Why the suddenly assets are decreasing? Why suddenly profit is decreasing? Why suddenly the sales are decreasing? Why the cost of production is increasing? How many assets are purchased in a year? What is the lie? All these things to prepare the information memoranda, the statute audit of the particular the unit is also available. That is also useful. Identifying the accounting irregularities and the qualification. So auditors remarks will also mention the regularities and the qualification, understanding the contingent liabilities. How many contingent liability? If at all you wish to ask how many bank guarantees, how many letters of credit, how many claims are pending, or workers' claims under Factories Act, all these things, if at all you are asked, then the corporate data may not reveal the information. But that contingent liabilities information is also available in a statute audit. That is also available. And verify the last reliable financial position before insolvency. Before insolvency. What is the financial status? Before insolvency, if the assets and liabilities are matching, definitely the same is continuing on CIRP also. On the date of the commencement of CIRP, definitely up to equity shareholders. If the company is under liquidation or the resolution plan, everybody should get it. But today, what is happening? Financial creditors 50% or operational creditors 30% they are getting or 25%. Lot of hair cuttings are there. But once the balance sheet is balanced and the assets and liabilities are equal, why the equity shareholders are not getting the full amount? Why it is restricted to the financial creditor or secured financial creditor? Auditor remorse on going concern, inventory valuation, related party transaction indicate early warning signals of the financial stress. If you verify the statute audit report, definitely the auditors will also comment about the related party. Comment upon of the inventory valuation, whether wrong valuation or right valuation, whether they are following the lay down instructions or not, and indicate the early warning signal of the financial state. That also they will mention. That also they will mention. So that's why these are very important areas. So we need not worry because once all information is available, you have to assemble the information, prepare the information memoranda, and whatever the cases are filed against the CIRP by the operational or financial creditor or the corporate data, you are in a position to answer them properly once the data or information is available. So auditors remarks on going concern, inventory valuation, related party transaction often indicate early warning signals of the financial stress. Concurrent audit reports of the bank, branches, concurrent audit reports. Today, the concurrent audit report, continuous audit, and big advances. Almost every week they will scrutiny, or every 15 days they will scrutiny, every 30 days they will review the big advance because a lot of attention is there. Once the company loans are there, banker side, a lot of efforts or close monitoring is required. So once they are closely monitored, all are on paper only, not from the word mouth, word of mouth. So the concurrent audit conducted periodically at bank branches to ensure real-time monitoring of the loan accounts. This is one audit report. What concurrent audit mentioned about this company account, whether it is a good company or any diversion or misappropriation, whatever the loan given by the bank, whether he has used for that purpose, that is called end use or not. These audits evaluate end user funds or stock statement. Every month, whatever the raw material is there, or the data are there, as per standard format designed by the bank, they have to submit. Based on the submission only, bank will allow to operate the working capital loan, that is called a drawing power. That is called drawing power. So to arrive the drawing power, every month the stock as well as the book dates are to be mixed. And the drawing power calculation. Irregularity in cash credits. Today, some of the companies they will take the loan, but whatever the sales are there, they are not routing to the account. Whatever the purchases are there, they are not routing through the working capital loan. They have opened a different the accounts with a different bank. They are operating different bank, not this bank. But once the company is the bank is verifying, if that is there, they will write immediately to the company also. The all correspondence with the bank only, that is financial creditor. Irregularity. So every 1 year, the working capital limit, that is cash credit limit, to be renewed. What is meant by renewal? During that year, whatever the sales are to be routed through the account, whatever the purchases routed through the account, timely the interest to be paid, all these things. Then, if all these things are satisfied, then only the account will be renewed. Otherwise, they don't renew. CIRP relevance. How this the concurrent audit reports are useful? Concurrent audit reports are help the RP verifying whether working capital was utilized for the business purpose. So the funds diversion will be recognized by the financial creditor. First person to identify whether the company is diverted the funds or not. Identify the instance of fund diversion. Understand the operation cycle of the corporate data. What is the operation cycle? That is a working capital cycle. The cash with raw material converted, work in progress to finished goods to the data to cash. How many days? It will so validate the stock and receivables levels claimed by the corporate data. Banks are closely monitoring, or financial institution whenever they are giving a loan, they are closely monitoring with the lens whether stock adequate is there or not. Once it is not available, immediately they will report it to the higher ups and they will issue the particular forensic audit to do the forensic audit of the particular company. All these things are there. And the credit audit reports and due diligence certificates. So every company, every year, banks are conducting credit audit. If the loan exposure is more than 5 crores. So all credit audit reports are with the bank. Every year, if the company is with the bank or financial institution for 10 years, 10 credit audit reports are. So every year, the third party, that is a professional, he will visit to the particular company and the credit audit report, structured report designed by the bank, they will audit. So the credit audit report and due diligence certificate, that is also required. So here the credit audit reports and due diligence certificate and the credit audit is a post-sanction review mechanism carried out by the banks to evaluate the quality of the credit actions and monitoring. These reports contain. So credit audit is a post-sanction review mechanism carried out by the banks to evaluate the quality of the credit decisions and monitoring. And these reports contain compliance with the sanction terms. Whenever the loan is given by the bank, they will take one letter from the borrower These are the terms and the conditions of the loan. That is called sanction letter. That is in some banks it is called a arrangement letter. If you want to see synopsis of the particular loan sanctioned by the bank or financial institution, you take the sanction terms and the conditions written. So the borrower has to comply or adhere the sanction terms and conditions. Second one is financial covenant monitoring. So whatever the financial transactions are there, as per the covenants or terms and condition, they are fulfilled or not, that is to be verified by the banks, closely monitor, promoters a contribution verification. And the project implementation status also. Project implementation status also. Suppose we have given a loan for a project. The project is 5 years. Every year, how much they are spending? All these things, project implementation status, that is also report is available with the bank. And during the implementation, any funds diverted by the company or not, or the corporate data or not, that is also can be verified. Utility for resolution profession. How this is useful to the resolution profession? The credit audit reports. Credit audit reports provide insight into original project viability assumptions. The assumptions, viability, deviation from projected performance. So, what is the projected the projected amount and how it is diverted or deviated? That is also available. Promoters behavior and compliance. Even though sanction terms and conditions are there, some of the promoters they don't comply also. If not complied, then bankers will identify the drawbacks and mention in the report also. That is called unit inspection report. Every month, the bankers are go there to the company and verify the important areas, whether it is functioning well or not. All these things are mentioned. Weakness in the internal control systems. Internal control systems, if at all in the company, internal control systems are weak, they will mention. This assists determining whether the distress in is business related or management induced, which is crucial in evaluating the resolution plans. So this is also useful in evaluation of the resolution plan. Whether it is a distress, is a business related or management induced or management failure, all these things are there. Next, risk-based internal audit observation. Today, banks, whenever they are giving loan, every 1.5 year, the internal staff, who is the auditor, he will visit and verify that one. That is called a risk-based internal audit. And the branch, they will personally visit to the companies also. The auditors, whether it is a risky account or non-risky account, they will identify. So the risk-based internal audit report is also useful to the resolution professionals or interim resolution professions. This information also gives some insights about the company. The risk-based audit report focus on high-risk accounts and evaluate operational credit and compliance risk. Such reports often highlight evergreening loans. Some of the loans, they don't pay anything, and every time they will renew with the same limit or enhanced limit with interest also. So that evergreening loans, some of the loans are always showing good results, but if you go in detail, definitely some bad things are also there. Inadequate security coverage. So once the loan is given, whether loan is fully secured or half secured or 25% security. Suppose the bank has given 100 crores. Whether collateral security like land and buildings, plant and machinery, and other things, stock and other things, the 100 crores is there or not. If not, then the auditor will mention in the risk-based internal audit. Suppose one company, the security given 50 crores, but a loan is 100 crores, then that is not correct. High leverage ratios. What is a leverage ratio? The equity debt. Whether the company is completely depending on equity or debt, that also that leverages. Stress indicators. What is the stress in the company? That is also the risk-based internal auditors, they will mention. They will mention. These findings help RP very identify systemic financial management, whether the company is a failure of the financial management or not, and the potential of a preferential and fraudulent transaction and governance failures, all these things are. So here, whatever the risk-based internal auditor, whatever the credit audit reports, whatever the statute audit reports, all are useful in one way or other to the resolution profession. Sir, are you getting my point? What I am telling, sir? Sir, madam, any clarification is required? Am I audible, sir?
Yes, you are audible.
Okay, sir. So here, the most of the financial information or general information about the company is available with the banks oblique financial creditors or financial institution. Why? Because whenever they are giving loan, during the life of that particular loan, they will collect a good amount of information of the company. They are conducting various audits. They are conducting various reports. Once the company is not paying immediately valuation, they will complete. So that's why the good amount of information is available with the financial creditor, that is either banks or the financial institution. Next one is a forensic audit report in NPA accounts. I am not talking about IBC forensic audit. That is a puff transaction. But why the company is failed? Why the company, how the company is diverted the amount? All these things are mentioned in the. So once the company turn into bad or non-performing, immediately bank management will order to conduct a forensic audit. Like IBC also, for a preferential undervalue and fraudulent and extortionate transaction audit is there. Our people are using the word forensic, but forensic term is not there in IBC. It is only a transaction audit. So the forensic audit report of NPA accounts, that is also happening. Not when the account turn into non-performing, suspicious suspension of the frauds arises, bank commission forensic audit. These report among the most critical document available to the key findings typically covered diversion and siphoning of funds. Diversion and siphoning of funds. They will correct the forensic auditor whether the company is a diversion or siphoning of funds. They will collect that information with evidence of proof in the forensic audit. Related party transaction. In the forensic audit, whatever the related party transactions are there, that also they will mention in the particular forensic audit of the bank branch on the company. Shell company routine. Once the companies are transferring funds to others, whether it is a genuine company or shell company, that also banks are verifying and give the report to the management round tipping of funds. So the money laundering transactions, round tripping is there. They are connecting to the another account, another account, another account. Suppose every month they are conducting some account credit to all the accounts, and whatever the interest primarily paid, all accounts are showing the evergreening the loans. But honestly speaking, that loans are non-performing assets and a fictitious sales and purchases. That also they will verify with the help of GST returns. Whatever the fictitious sales and the purchases are there, they will verify. That is called that also it is mentioned in the forensic audit conducting by the bank. So, being a resolution professional or IRP, you ask the financial creditor, sir, can I have the forensic audit report of the company? Definitely, he will share to you because you are handling that particular company. There is no bar, there is no hidden agenda, there is no the against that particular reports by the other statutory laws, etc. Definitely, 100% it will provide to you. And the fictitious sales and purchases also. And the CIRP. How this forensic audit report of the banks, not puff transaction. This is a different. Banks on their own, they are conducting forensic audit, either internal or external. Either internal or external. Forensic audit report assisting, initiating avoidance of proceedings under sections dealing with the fraudulent and preferential transactions and a supporting application before NCLT and aiding investigation by enforcement agencies and strengthen the Siva sedition on promoter ineligibility under section 29A, etc. etc. So whatever the forensic audit reports, that is very useful. If at all he is a willful defaulter, he is not comes under the he is not even though 240A he is eligible to for the prospective resolution applicant. If it are any adverse remarks are there in the forensic audit, definitely under 29A he will be disqualified. So disqualification only that account NPA means they will allow. If at all they are mismanagement, all these things are there. Definitely in the 29A is not eligible also. Some of the people they are not verifying this one also. The forensic audit reports. Forensic audit reports. Monthly stock statement. This is another important document in the CIRP process. Monthly stock statement. Once the banks are sanctioning loan for the stocks or debtors, that's why the yearly audit is there. Every earlier half yearly audit is also there. Stock and book debts audit. Stock and book debts audit. Stock and book debts audit. And every month the borrower has to submit a stock statement for pharma industry or sugar industry or textile industry or iron and steel industry, etc., etc., etc. So that stock statements are also to be submitted and verify. Banks are also verifying. Sometimes they will verify with the stock statement with purchases and the data are also credit sales register. They will verify and any related party transactions also they will mention. This stock statement file is also available with the financial creditor month wise. And once the stock statement is received, based on the stock, the financial creditor will arrive the drawing power. How much he can utilize that working capital. capital. So that's why the monthly stock statement and the drawing power monitoring that is happening in the banks or FIs. Borrower submit a monthly stock statement. Receiver submits the banker for working capital assessment. Bank computer drawing power based on the submissions. Whatever the stock statement also sometimes the banker will go to the company and verify in the godowns as well as the stock register as well as the debtors registers. The importance in CIRP, these statements help the RP reconstruct inventory movement over time, identify the inflated stock reporting. Once the banker's stock statement and whatever the balance sheet items are there, you can verify also. What is the amount mentioned in the balance sheet? What the amount mentioned in the stock statement, you can cross check also. Compare the book stock with the physical inventory during CIRP. Suppose that the stock is mentioned in the stock statement, but the if you verify the physical stock is less than this one, then you can ask where the stocks are diverted or used by whom, and understanding the seasonal business cycle. Stocks are not constant. It is a dynamic one. It depends upon the season. Take for example, rice mills are there. During harvesting season, the stocks are increasing. During the sowing season, the stocks are zero or minimum. So they also help to demonstrate whether a stock depletion occurred before insolvency, indicating possible siphoning or not. All these things are there. So here also the stock statement is also one of the particular important area during CIRP process. CIRP process. So that's why whatever the information is there in one way or other, the information is useful for the resolution professional or successful resolution professional. And sir, up to this point, any gaps are there, communication gaps, or any clarifications, or any questions are there?
No, sir.
No. So the purpose of this class is the financial creditor who is funding or given the loan to the corporate debtor 50 or more than 50%, the company's data is available with the financial creditor, either by way of reports or either way of the statements or by way of the particularly audits, etc. So the RP need not worry. The full picture of that particular company is available with this one. Quarterly annual financial statements submitted to banks. And what is a quarter? Even if at all loan exposure is more than 10 crores in some banks, 20 crores in other banks, they will insist a quarterly financial statement, quarterly audited financial statements. That is a Q1, Q2, Q3, Q4. So apart from statutory annual statement, borrowers submit a quarterly financial statement as a part of the loan covenants. Useful quarterly statement enable or identify exact quarter when the financial deterioration began. So once you are verifying the quarterly statement, last quarter, stock is 200. This quarter ended, stock is 50. Then banks will raise why stock is reduced. Last quarter ending, you have mentioned 200 crores, stocks. This quarter, you have mentioned 50 crores, 150 worth of stocks, where it is lying, whether it is there or not. Some of the borrowers, they will tell, sir, stock is converted into finished goods we have sold in the market. Some 25% of the stocks cash, remaining 70% is 75% is the this one. What is the debtors? Okay, in that case, we can cross check that one. Some people they are diverted the amount to other purpose also. Identify the exact quarter when the financial deterioration began, when the sickness started in the company, assess revenue decline trends, and verify whether financial state was sudden or gradual. That also we can assess. Once the stock statements are there, or once the financial statement like a fund flow, cash flow is available, then we can find out in which quarter or in which month the stocks are fallen, and immediately we will verify with the particular corporate data. Identify the exact quarter when the financial deterioration begins. Assess the revenue decline records and verify whether a financial state was done suddenly or gradually. This assess establishing the insolvency commencement context and analyzing the avoidance transaction timelines. So, through the financial statements audit or through the financial statement submitted by the borrower to the bankers, we can find out the puff transaction period, where it is happened, why it is happened, and how much amount, all these things we can assess. We can assess. Special monitoring agencies and early warning reports. These are the two areas. Special monitoring. Only one. So, special monitoring agency. What is a special monitoring agency? Honestly speaking, this report is completely useful to the IRP account. What is a SMA? Once the loan given by the bank to any company more than 250 or more than 250, 250 crores and more than 250, definitely the SMA to be appointed. One profession, either chartered accountant or industrial specialist or cost accountant, whoever is there, his duty is closely monitor the company's activities. If at all any early warning signals are there in the company, through the report, he has to brought to the notice of the bank. That is called ASM. The ASM is 250 crores and above advances. Now the banks are appointing the professionals like a chartered accountant or cost accountant or industrial experience like a power sector or real estate sector, etc. So daily, almost they will go to the company. They will verify the financial transaction, non-financial transaction also. And accordingly, they will prepare the report as per the standard format designed by the bank. This is called ASM. ASM is 250 crores and above loans and early warning reports. Accounts showing stress are monitored under special mention account. Banks are generating monitoring reports, including overdue position of the account. When the overdue was started, irregular drawing power, irregularity of the drawing power, when it was started, check return frequency, how many checks the company is presenting, how many checks are bouncing, that information, covenant of breaches, what are the sanction terms and conditions, how many are utilized, how many are not utilized. These reports provide a timeline of financial distress with the help of defending CIRP initiation before tribunals. So, this type of reports are also useful for defending the CIRP initiation before the tribunals. This is also a report that is called ASM or Special Mention Account. Unit inspection report by the relationship managers. This is another report that is available with the financial creditors. With the financial creditors. What is that report? Unit report of the relationship manager. This is also useful. Every month, when the bank is given a loan to the company, either working capital or term loan, the relationship manager of that particular loan in the bank branch or the credit officer who has sanctioned the loan, they will visit to the particular unit. And the unit inspection, they will write whatever the irregularities are there or committed by the company, all will jot down. And he will come back to the bank and prepare the note. These are the irregular features that are come across during my visit to the company. That is called unit inspection report by the resolution managers or resolution professionals only. What is that one? Bank officials periodically inspect a borrower premises and prepare inspection report documenting operation status of the plant, whether the plant and machinery is in working condition or simply they have not. Inventory levels, whatever the loan given by the bank, above the level, the inventory is there or not. And the labor strength, whether the company is having an adequate labor or not. If labor is inadequate, then the production will stop. Or once the production is stopped, then automatically sales problem or revenue problem to the company will arise. And the production capacity utilization. So, this type of the unit inspection also, the bankers also verify what is the production capacity utilization. What is the production capacity utilization? The utilization of the loan is, suppose the machine capacity per day, that is 24 hours in 3 shifts. If the company is, the machine is manufacturing 24 and now the manufacturing, they are manufacturing only 10 means underutilization. So underutilization means always a danger because of the depreciation of the machinery will increase and thereby the company will incur. So the bankers will ask increase the production capacity minimum 90. Minimum 90. How it is useful? These reports are useful to the resolution profession, confirming whether the unit is operationally immediately prior to the CIRP or not, determining whether CD is a going concern or not, and planning interim financial requirement, all these things. Once he verified that particular the unit inspection registers some idea for the interim finance and whether the company is a going concern company or not, and whether the unit operationally immediately prior to the CIRP or not, all these things. Sir, any clarification or doubts? Is it understandable or any problem, sir? Any problem in understanding? So far, I discussed some aspects, whether that aspects are useful to the financial, to the IRP or RP. Tell me your feedback, sir. Tell me about your opinion, whether these reports, these audit reports gives us some insights about the corporate data functioning in the earlier years before insolvency commencement date or not, and whether these reports are useful for the PUF transactions, and whether the audit, forensic audit report or statutory audit report is useful or not to the IRP or RP. Tell me about your opinions. Hello. Whether these are useful or not useful. Whether these are useful or not useful.
These are useful, but I think, sir, it depends on the situation of the size of the CIRP.
Correct, correct, correct.
And secondly, the cost involved has to be approved by the COC, because this is another major hurdle that we face as IPs.
Sir, this data is not to be purchased. Simply the COC member is a financial creator. The data is available with him. Straight away, the RP or ERP, they can procure.
I'm not saying data, but I'm saying engagement of any agency will cost. Whether it is CA or it is special agency or this thing. So that part needs to be approved, understood by COC. That it is
Suppose take for example, sir, the valuation report. Every 3 years, the financial creator is completing the valuation reports of the securities offered by the company, whether it is a land or building. Whether these reports are useful to the IRP or RP?
Definitely, it's useful. Yes.
Yes.
It gives a picture of the assets available, etc.
It is useful to some extent. Why? Because suppose the registered values anyhow you are going to appoint, whether that report total amount or fair market value or liquidation value tallies with the bank fair value market, the liquidation value tallies or not. Okay, 10% that side, this side is not a problem. 10% that side, this side is not a problem.
One more thing is that if it is too old, say sanctions have happened or disbursement have happened by the bank, say in the year 2019 or something like that. Or so today, 2026, when we are doing the CIRP, obviously we require the current position to be understood, because the valuation at that time and today will be different. It will not be the same. So when the IRP is working today, all said and done, he has to consider the valuation today. So because that is why that is also it is required. What you are saying is very much required.
Sir, here, suppose I take for example, the asset is turned into non-performing. Even though they don't look into that whether 3 years completed or not, within 1 year also, again they will ask the valuer to value the property once the account turn into non-performing asset. Once the account turn into non-performing asset, it is definitely to be filed with the NCLT. So whatever the reports given or after formation of committee of creditors, after completion of the valuation, these reports you can compare whether the registered value rate is high or the banker's valuation is low. Because today, what is happening? Some of the corporate data, so they are telling my property value is much more than the prospective resolution, applicant resolution plan. So to avoid that one, if both are 10 or 15% discount, the difference is there, then nobody will object. So last week, one in one CIRP, the valuation is entirely the prospective resolution applicant or successful resolution applicant. 4 people have submitted the resolution plan. One is submitted for 271, another is for 90, third one is 70. 270, 90, 70. For round figure, we will take that one. 290, 270, 90, 70. But the resolution professional finalized for 70. Okay. Commercial wisdom is there. No doubt at all. Commercial wisdom vested with the COC. Correct. But the NCLAT, they have verified in detail. So whatever the evaluation matrix is there, in the evaluation matrix, he awarded lower marks to the other PRS intentionally. Even though you are having a full right on commercial wisdom, the gaps are there in the CIRP.
Yeah, that is a fraud actually. That is fraudulent practice.
Sir?
It is a fraudulent practice actually. This is not.
So this type of differences, whatever the bank reports are their valuation, that also we can cross check to some extent. I'm not asking now, I'm not telling that it is 100% all the information. Suppose you take, for example, information memoranda. Whenever the loan is given by the bank, they will prepare a appraisal report. In that, what is the activity? What is the demand and supply? What is the machinery required? What is the market share? How many competitors are there? What type of machinery it is required? What is the own capital? What is the borrowed capital? And what rate of interest going to be charged? What is the primary security? What is the collateral security? What technology they are adopting? What is the quality of the directors? Their DIN number? Whether it is any disqualification? All these things are available in the appraisal. To some extent, this appraisal is useful for preparing the information memorandum. Information memorandum is nothing but a marketing brochure. In the marketing brochure, you have to highlight about your company. And if it all simply, these assets are there, these liabilities, and simply not like that. Whether it is a unique company, whether the company process is an USP, unique selling proposition is there or not. And how much or how many years back the machinery is purchased. Whether the machinery is, the still technology is continued or outdated or redundant. All these things you have to mention in the information memorandum. Some of the information memoranda I have seen, simply they are mentioning whatever the assets are there, whatever the liabilities are there, simply a company name and when it was the insolvency commencement date, like that. That is not sufficient. This the marketing brochure. You have to highlight your company's this one, locational advantages, product demand and supply. Then only the value maximization will happen. Suppose whatever the product you are going to sell, even small medical representative or the TV refrigerator or TV or the refrigerator or washing machine, she will tell so many things. That function is there. These functions are. This is the latest models are like that. What is the problem? Whatever the true facts are there about the company, what is the problem in disseminating that information to the through information memoranda? But whatever the loan appraisal format is there, you draw some information which is a valuable information from the point of view of the prospective resolution applicants. I'm not asking you to give the wrong information. I'm told that this is a correct information. This is a unique product. This is a number of competitors are less for this product. Then only the prospective resolution applicant will be tempted. Next one is loan appraisal and the sanction documents. This is available with the financial creditors. Who is a member of a COC? The number of COC meetings. If you ask, immediately he will take the Xerox copies. Or today, what is happening? Most of them are digitalized in the banks. Whatever the documents, whatever the appraisal, whatever the sanction terms and condition, whatever the documents like mortgage deed or hypothecation, all are scanned. He will send the PDF file to you. For that, you need not go. Put a request over phone also, need not be on the COC date. Sir, I am calling some for COC, for a CIRP process, some information is missing, sir. Can I have the loan appraisal or sanction document? This one. Definitely they will provide. It is not a confidential information. The project appraisal note prepared at the time of loan sanction include project feasibility studies, whatever the economic viability. If you mention some of the vital information about the facts of the company in the information memorandum, what is the wrongness? Is there any standard document is available for information memorandum? No. It is a marketing brochure. I'm reiterating that don't give any wrong information or false information. If that company is a, suppose I take for example, the company is plenty of water is available to run the company. Whereas in other companies, the water resources are not available. They have to transport the water from other places. Thereby the transportation cost leads to cost of production. Highlight that one. Nearest to river, the companies, the groundwater levels are more. For this company, manufacturing process, abundant, the water is required. Definitely, it is a invisible asset. It is a intangible asset. Thereby, definitely the prospective resolution, the prospective resolution tempted to buy the company. So instead of a X company or Y company, which is far away and water resources are not available, in this company, water resources are available. The feasibility studies, projected cash flows. What is the projected cash flows? Projected cash flow statements. And why it was not happened? Some, if you put 1 day or 2 days on this area, definitely a good results will happen. And security coverage calculations. Bankers, whenever they are taking the loan, they're giving the loan, they will value the security coverage values. So I am going to give the 100 crores, but the security offered by the company is 150 crores. That is 150% of the security coverage is there. Industry risk assessment. So some of the companies, the risk is low. Some companies, the risk is high. Low risk companies easy to sell. Sell means the inviting the resolution plans. So here the information memorandum is not restricted to name of the company, corporate incorporation, how much loans taken from the bank, what are the assets, what are the liabilities. No. The manpower. Suppose a nearby company, the migrant labor or casual labor is available. That is one plus point when compared to the other companies. Some companies may be started elsewhere where the labor problem, labor availability is not there. Here, next to that, government, they have provided some free bedrooms to the poor people, some lower post, casual labor, plenty of labor is available. That is a plus point. That adds to the value of the particular company. Value maximization is possible. Information memorandum is not a simple thing. Today, whenever I am verifying, simply they are mentioning some areas, not all areas. These documents are critical in CIRP because they provide a baseline assumption for resolution valuation. For prospective resolution applicants also, this is useful. Assist in preparation of information memoranda under section 29. Help a resolution applicant understand the original business projections. Understand the original business projections. Suppose for this no competitor is there in the India, then it is a greatest advantage. Demand is high, production is available only 25%. No competitors are there. The valuation of the company is much more than the physical assets of the company. Highlight that particular information memorandum. And letters of credit, bank guarantee, trade finance records. So, first the financial creditors. You get the information. How many letters of credit? How many bank guarantees? How many bills discounted? Details. Particularly in the trade bills, what are the data names? Once the bank is discounting the trade bill, they will mention, they will inform to the debtor also, don't pay to the company. Company has availed the amount of 90% on the bill. So, for recovery of the debtors, this trade finance records are available. That is with the bank. If that is not there in the company, simply we are not closely monitoring the debtors, which is required. Which is required. So, instantly, whatever the contingent liabilities that is available with the particular the financial creditor. And against the company, how many suits are filed? And whatever the Workmen Compensation Act, any cases are pending with the High Court or Honorable Supreme Court of India. Because banks' standard formats, appraisal formats, all information is available. It depends upon the bank to bank. Financial creditor maintain detailed records of LC issuance and development, BG invocation, trade bills discounting, transaction to trades today. The company, particularly the companies are using the trades platform. Suppose the company sold credit sales to the debtors. Immediately they will approach a TREDS, trades, trade receivables and discount scheme. And they discount that one. So once the bill is not paid, the company is not responsible. This is without recourse. Without recourse. So the trades, that is also good the source of information. And crystallize the contingent liabilities. How many going to be devolved? And operational creditor exposure and off balance sheet obligations Off balance sheet means not only the LC, not only the bank guarantee. Suppose employees are liable, they filed an application with the High Court because the compensation is not paid, a bonus is not paid, or gratuity not implemented in the company, or provident fund management contribution. So once the case is going to be in the favor of the company, in the favor of the employees or labor, definitely that contingent off balance sheet obligations are also to be mentioned. So once the information memoranda is the heart of the CIRP process, the information memorandum should be a detailed one. A detailed one. Then automatically some good results will happen. Some good results will happen. Check bounce default and recovery records. That is also available with the bank. How many checks are bounced? How many checks are bounced and how many are company filed a case against those the drawer of the check under section 138 to 140. That is also recoverable. Once the company is filed, how many cases are filed? What is the case status? This information not readily available. Default and recovery records, particularly with regard to the data. In the similar manner also, against the company, the creditors, if the company has a given check for supply of raw material, the directors will sign and give it the check, but check is bounced against the company. So the contingent liabilities are also to be valued perfectly. That's why valuation, registered valuer is not the criteria. Registered valuer, whatever the information you are providing, he will give. If at all he is unknown, then he won't mention in the report. You brought to the notice. You have covered that one, this one, that one. Have you covered about the contingent liabilities properly? Then only all these things. Later on, otherwise, if at all we are not mentioned all these things, then it will be a problem. Later on, it will be a problem. Bank means data on a dishonored check. The data is available with the bank. How many checks are dishonored? And overdue installment, that information is also available with the bank. And not only that one, the penal interest. The banks are now, the companies are not submitting stock statement. The company is not renewed the loan, or the company is not following the sanction terms and conditions of the loan. In all these cases, penal interest will be charged. That information is also readily available with the bank. So, you are the CEO of the company, of the defunct company. You have to get the full information. Then the CIRP process will success. Definitely it will be a successful one. Maximization is possible. The particularly risks like some of the people, they are complaining, they are filing the cases with NCLT or NCLAT and the Supreme Court of India. All these things will come down. Come down. Security creation and charge restitution. Okay. Financial creditor is given some information about the securities, that is mortgage or hypothecation or pledge or lien, LIN, lien or assignment. Suppose the assignment, debtors, whenever the banks are financing to the trade bills, that is trade sales, they will take assignment. Whenever the bank is whenever the bank is giving any bank guarantees. On bank guarantees, some banks 50% cash margin, some banks 25%, some banks 10% cash margin they will take. So on that lien is there, pledge is also there, assignment. Whenever the company, the banks are giving loans against the shares or against any the government securities, they will take the lien or assignment. And whenever the mortgage properties are there, immovable properties, mortgage. So this is not only with the bank, but also under Section 77 of the Companies Act 2013. This is also to be recorded in ROC. So security creation, charge registration, that is also important. How it is useful? Bank register charges with ROC under Section 77 of the Companies Act. Charge documents including hypothecation agreements or mortgage deeds or pari-passu agreements in consortium. So all are to be verified properly. In one case, particularly one case, the classification of the operational and financial creditor is wrong. One person is an operational creditor, but wrongly identified as a financial creditor. If you go into the details, we have to read that one. It will take a lot of time. So wrong classification gives a cancellation of CIRP. Once he is an operational creditor and you are inviting the COC meeting and you are giving the voting power and you are providing the sensitive information to him, then it is a problem. So classification is also very important. CIRP benefits. The RP relies on these documents. Verify secured creditor status. Identify first and second charge holder. Prepare asset security matrix. Avoid disputes in litigation, liquidation and waterfall distribution. All these things. So, for every paper information not available at one place, it is scattered, but 50% of the information is available with the financial creditors. Who is the bankers? Who is the bankers? So that's why you have to collect the information from different sources. Okay, you filter it. Some information may not be useful. Some information may be useful. So whatever the information useful, jot down on a book and use that information in an appropriate time. SURFACE and DRT proceedings document. So about the total case in a story manner, it is available in OA. So that is particularly whenever the case is filed with the debt recovery tribunal, original agreement, all particulars from the day one onwards up to filing of the case in a sequence and story manner, the OA document will be prepared and submitted to the debt recovery tribunal. All documents, all papers in a sequence manner, and the index is also available. And the document will be prepared in a structured and story manner. SURFACE and DRT proceeding documentation. Okay. Prior to CIRP. Financial creditor initiate recovery of a securitization. All cases, banks are not filing directly with IBC, under IBC. Some of the cases initially, what they are doing is, first they will file they will recover under section 13(2) or 13(4) under surfacing. After that, they will go for DRT. After that, some cases with NCLT, or in some cases directly they will go to the this one also, IBC also. Prior to CIRP, financial creditor often initiate recovery under surfacing and enforcement of security interest act 2002 and file cases with the debt recovery tribunal. After that only, once the efforts are fertile exercise, then only they are switching over to the NCLT. But some cases today, some cases they are directly filing. Here also, the bankers are also verifying the cost benefit analysis. Cost, the benefit analysis. Which is the best one? Surface is the best one. After that, DRT. After that, IBC. IBC is a costly. CIRP cost, they have to bear it. RP cost, valuation, forensic auditor, other, so many costs are there. But in 13(2) or 13(4), simply banks are giving notices. Now they are experts in taking the position of the assets also with the help of recovery agencies. Utility in CIR. These records help RP understand the prior recovery amounts, items, and access updated asset valuations and evaluation realizable value versus a liquidation value. All these things are happening. So evaluate and realizable value versus a liquidation value. So the valuation reports are available to you before insolvency commencement date. That is a rough idea about the valuation reports of the various assets of the company, which are mortgaged, which are assigned, which are hypothecated to the banks for availing the various loans. I need not wait till the registered valuer given that particular document. Before that, the valuation is available. Valuation report of the primary and collection security. Once the CIRP commencement date is before that only these reports are available. These reports are with the financial creditors on. So the rough idea about all these things is useful to the IRP or RP at the time of the initial starting of the process. Bank periodical obtain valuation of a mortgage risks every 3 years or upon NPA classification. So the latest classification of NPA is also available. These reports are assist in cross-verifying valuation obtained during CIRP. Assist in cross-verifying valuation. What I told is the valuation reports are also you need not take the bunch of the valuation. At least earlier valuation report, what is the rate given by the bank valuers, whether it is a fair market value or liquidation value. Banks are not using the word liquidation, forced market value or a distressed value. In case today, if at all I wish to sell, how much the property value? Help in identification of asset erosion or removal. Once you are asking the valuation reports of the bank, whether all assets are available with the company or not, you can verify. You can cross-check also. Thereby, fraudulent transactions are also can provide a historical valuation trend data. How the valuation, because every 3 years means if the loan is continued with the bank for 15 years, the same value in the times, how the value is increased. And annual review and renewal of credit facilities. Every year, the banks will review the loan. Review the loan. While reviewing the loan, they will take into latest financial data. The financial data, to some extent, it is available. This is available with the financial creditors. Who is a committee of creditors? Member of a committee of creditors. They will provide this information. And whatever the information gaps are there, that can be filled up with the financial creditors information, that is authenticated information. Some of them are audited, some of them are verified, some of them are valued, etc. Working capital limits are reviewed annually by the banks. Review notes are captured. Updated financial analysis. Industry outlook also they will mention. This is useful to mention in the information memoranda about the process of the company, about the market, about the demand, about the customer profile or customer segmentation, all these things. The industrial outlook. Account conducted summary. How the account is conducting. And the renewal conditions. What the banks are mentioned the conditions, whether the borrower is fulfilled or not. So here, the lot of information is available. So information, different sources is a difficult task, but 50% of the information is available with the bankers. That information through the appraisal forms, renewal forms, stock statement, unit inspection register, and primary security, secondary security, and due diligence audit, or agency for special monitoring, etc., etc., etc. Okay, now coming to the provide RP with a year-wise narrative of the borrower's performance and evolving risk perception by the lenders also. Consortium and multiple banking arrangement accounts. Some of the big corporates, big loans, more than one bank participation. And if at all in consortium, different banks, brains are working. They require their credit policy guidelines. And here in consortium, the lot of information is available about the company. Because 5 to 6 or sometimes 10 banks, they are participating in one lending. And each bank, their requirements of information is required. And accordingly, the borrower has to pay, or the consortium leader has to provide that information. In consortium lending, lead banks maintain intercreditor agreement. So among the banks, one agreement is that is called ICA, intercreditor agreement, sharing ratios, minutes of consortium meeting, etc., etc. These are vital for constitutional and voting rights of the committee of creditors, verification of exposure levels, smooth claim and collusion across the banks. So all are the vital for committee of creditors, verification of exposure levels, and smooth claim collection collation or across the banks. Next, we will take the break for tea, sir. Now it is 3:50. 10 minutes we will take the break. 4 o'clock sharp we will start, and up to 5 o'clock I will discuss some other aspects. Is it okay for you, sir? Hello.
Yes, sir, it's fine.
Yes, sir, we can continue.
Okay, sir. Sir, shall I start now? PPT is visible,
Yes, sir,
sir.
you can.
PPT is visible, sir. Is it visible, sir? PPT?
Yes,
Yes,
sir,
sir.
it is visible.
Yes,
It is
sir. It is
visible.
visible. It is visible.
Okay, sir. Thank you. Sir, here again, I'm continuing the same thing. During CIRP process, the main stakeholder is none other than financial creditor. And he is flushed with information. To my knowledge is concerned, 40 to 50% of the information straight away you can get from the financial creditors, registers or books or files or audits, whatever it is there. He is a master. He knows everything about the company. And before you, he did, or he completed number of the valuation reports, audits, agency for special monitoring, credit audit, monthly unit inspection register, stock statements, insurance policies, how many complaints are there, how he diverted the funds to other entities, what are the related party. He is flushed with information. That information is useful to you. Case by case, it may differ. But being a banker, that too, we are continuously living with the corporates or the industries or business entities. What is the style of functioning of the company? Whether they are misappropriated the funds or not. And what is the demand for the product? Who is the potential customers? At the time of appraising that loan, we get that information. Then only we will extend whatever the loans that are required by the corporate data. So, please give some attention on financial creditor data also. If you require, he is a COC member, you are interacting with him continuously, and whatever information definitely he will provide. No hidden agenda, nothing. So that's why the decoding of the various reports of the financial creditor for effective CIRP management. Credit audit report, stock audit report, due diligence certificate, under valuation reports, insurance policies, agency for special monitoring, specifically on that particular entity. This information not available in operational creditor. This information may not be available with a class of creditor. That's why, please, whenever some missing data is there, whenever you require additional data, you straight away go to that particular bank branch or financial institution, interact with that credit officer. Boss, this data is required. For easy compilation of information memoranda, the project appraisal report of the borrower is very much useful. Information memoranda is simply name of the company, name of the directors, when it is CIRP comes, not like that. You have to sell that particular company to a prospective resolution applicant, or you have to hand over that particular company to the prospective resolution applicant with the value maximization. Only one example I am quoting. This is a unique product. No company is there in India. Definitely everybody is ready to purchase. They don't bother about the asset valuation. They don't bother about the manufacturing process. So I will become the monopoly in that particular product. The backward and forward linkages, nearest to raw material, nearest to market, or whatever the infrastructures, transport, or particularly the electricity. If you acquire this company, continuous electricity is available. If you acquire this company, you need not bother about the water. If you acquire this company, the mines are nearer to that particular company, thereby the transportation costs are minimized. How many people are mentioning in the information memorandum? If you are simply giving an A4 size or 2 or 3 pages, that is not suffice. It is a marketing document. For that marketing document, presentation skills are very much required. To sell one old refrigerator, to sell one old the washing machine, the marketing people, they are giving a lot of information about that particular product. Okay, in that case also some wrong information is there. I'm not talking about the wrong information. Don't give any wrong information. In the information memorandum, the facts, the figures, the latest information, extra. The role of this document in avoidance of the transaction analysis, audit and a monitoring report often highlight if at all the banks are going for great audit. The goods are purchased from related parties or sold to that particular subsidiaries or associate. All these things because you are handling the company for 180 days or 270, at the most 330. But if the loan is operated with the bank 10 years, means 360 into 10, 3,600 days, the banks are closely monitoring about the company. Whenever the credit officer is going and handing over to the new one, he will pass on the message about the company, about the directors, about the fraudulent transaction, all these things. Be careful that company will give wrong stock statements. Whatever the stock statement, if you compare it to the store's ledger, it will not tally. Or it will not tally with the closing stock that is mentioned in the profit and loss account as well as the asset side of the balance sheet. Unusual funds transfer. So once the working capital loan is they operated in the same company, the funds transfer. That information is also available. Asset sale below the market price. So once the valuation reports are there, that this valuation, the bank valuation, the financial creditor valuation, some importance is there. Okay, registered values, land and building, plant and machinery, securities valuation, or whatever it is there as per IBBA. This is last 60 years or 100 years, banks are following some good values. They are giving the reports. That reports are also look into. I'm not asking you to study. I'm not asking to complete one line by line. What is the fair market value? What is the distressed value? Distressed value is equivalent to liquidation value. Why our value is given high? Such data enables RP to file an application for preferential or undervalued fraudulent transaction for maximizing the value of creditors. Contribution for preparation of information, memorandum and resolution plan, evaluation. Whatever the data, For preparation for IM, it is useful. And evaluation process also. The information memorandum requires accurate data, the assets, the liabilities, the litigation, the security interest, the financial history, and whatever the SWOT analysis of the company. All these things are never mentioned anywhere. But they have mentioned one thing, that is value maximization. Once you told about your product to the prospective buyers or prospective resolution applicants, then only they will quote higher amount when compared to the low amount. Financial criteria. MIS fills information gaps where the CD internal records are incomplete or unreliable. This enhances the credibility of the data, investors' confidence, quality of the resolution plans result. This is nowhere mentioned. Decoding of financial records, financial data, nowhere mentioned. If at all are mentioned, the IBC regulation is 300 pages or 400 pages like that. The professional expertise is to be adopted in CIRP process. Usefulness during the liquidation proceedings. If a CIRP fails, liquidation is initiated. These records assisted liquidator in identifying secured assets, verifying claims, defending the avoidance transaction, supporting auction reserve price decisions. Before you, some process is already completed. 50% of the cases that are filed with NCLT, before that SURFACE 2002 initiation was happened, one-time settlement was happened, compromise was happened, and a debt recovery tribunal also happened. The bankers or financial institutions are having flashed with the information. That information, to some extent, it is useful for qualitative decision. Practical advantages for IRP or RP. Assess the financial creditors leads to faster claim verification, reduction in litigation. Some of the people, whatever the RP or IRP valuation report, sorry, this is wrong. Then you verify this one, how the banks earlier, what is their valuation? Okay, 10% growth rate every year on year basis is there. You add 10%. If it is matching, where this mistake is there? The base documents are available. Improved transparency in COC decisions. Better negotiation leverage with the promoters. Promoters will ask, sir, my value is great value, sir. Why you have given that company to the PRA or successful resolution applicant with a lower rate? Smooth completion of CIRP with the statutory timelines. Once the information is available, timely available, the process will be easy. You are the assembler. You are assembling all these things. Like a music director, all people, they are using the various instruments, but he is giving directions. Like that, you are the music director of the CIRP process. Audit reports, inspection records, MI is maintained by the financial creditor firm. Indispensable evidence base for insolvency profession. And these documents not only provide historical financial clarity, but also assist to detecting misconduct, validating security interest, and enabling the informed decision making by the committee of creditors. That is the purpose. That is the purpose. If you see the difference between one person is a banker who is handling the large scale advance, who is handling the CIRP, another is not having the knowledge about the this one. Some difference is visible. The style of function. If at all I am the head of a company or you are the head of a company, the style of functioning will be different in the similar manner also. Their systematic use of significantly enhances efficiency, transparency, beyond all these things, value maximization, envisaged under India's insolvency framework. Role of ancillary borrower documentation in CIRP application. Whatever I have discussed, some ancillary documentation is also available. That is also useful. This documentation is also useful and they are available with the financial creditor. What is that one? While core and financial audit records provided insight of the financial health of the corporate debtor, several ancillary documents obtained by the banks at the time of sanction during the monitoring of the account also play a decisive role during insolvency proceeding. These documents help asset tracing, liability crystallization, regulatory compliance verification, and recovery maximization. So the 50% of valuable information is available with the financial creditors. Because they run the show of Surface 2000. They run the show of a debt recovery return. They run the show of the one-time settlement or compromise and they are completely involved in that particular process. Net worth statements. Whenever the banks are giving any loans, the net worth statements are obtained. In some banks, it is called opinion reports. So, opinion reports or net worth statements are available with the financial creditor. Suppose you are going to handle the personal guarantor to corporate data. Personal guarantor to corporate data. The person will tell, the guarantor will tell, sir, I don't have the assets. Sir, whatever my funds, hard-earned money, all are invested in the company. So the company, they failed. Now I'm they become a bankrupt or like that. But at the time of giving the loan, he will tell, I'm having this much 20 acres of land at this village, and I am having the 2 crores insurance policy, endowment policy in LIC of India. I have purchased nearly the particular. Why? Because whenever the net worth statements are submitted by the corporate guarantor or the personal guarantor of the personal guarantor of the corporate, they will declare with the proofs also. Suppose a personal guarantors are there, leave it of the corporate guarantor. Company guarantor means they will mention about all the assets and what is the loans against those assets, all are provided in a tabular statement like that. And the personal guarantor also, he will he will mention if at all 20 acres of land is there, he will give the Xerox copy of the title deed. If at all he told that 2 crores worth of endowment, the banks used to take a Xerox copy of the LIC policy also. If at all he told 50 lakhs invested in national savings certificates, then Xerox copies. Then only they will arrive the net worth statement. But some banks, the net worth statements are to be signed by the chartered accountant. But in State Bank of India, whenever we are preparing the net worth statement, we use to insist the documents, Xerox copies. So once he told a personal guarantor, I don't have assets. What is this assets? If you see there, take the, suppose the land is there, you go to the land particulars, Xerox copies are available. Based on that, if you take the encumbrance certificate from the register office, definitely whether it is sold to anybody or still in his name, easy to locate it. So the net worth statement of the corporate guarantors. The financial creditor obtained a periodic net worth statement of the corporate guarantor to assess their financial capacity to honor guarantees. This is with regard to companies, corporate guarantor, and personal guarantors are also there. Importance in CIRP. During CIRP, these document statements are help in resolution professional to identify the financial strength and the solvency of the guarantee entities. Evaluate the feasibility of a in-working guarantee. Suppose he has given and today there is no value at all. That company is also insolvent. So feasibility of invoking guarantee. Otherwise, invoking guarantee, it leads to additional expenditure, means there is no fun in invoking that guarantee. Assess whether the guarantor itself is a financial distress and may require parallel insolvency proceedings. If a guarantor is solvent, the committee of creditor may consider enforcement of guarantee outside the CIRP to enhance recoveries. Personal guarantor documents and net worth statement of directors. The personal guarantors, they will also give some guarantees. They will also give some net worth statements. Verify that one. Once you are handling the PG to CD also, use this net worth statement. What he mentioned earlier. Today, what is happening is at the time of giving extending the loan by the banks, the company will tell so many Eastman color statements. Directors also, sir, it is nothing for me. I am having the total land of 100 acres, 200 acres, or gold, this, that. But once the company is in CIRP, sir, whatever the hard-earned money is there, I have injected in the company. Now nothing is there. I'm staying in my daughter's house. They are giving food to me. Nothing is there. If you extract that net worth statement and verify the assets, all are available. Because Xerox copies are also available. Particularly some banks, I don't know the other banks. Promoters direct often execute a personal guarantee and submit their personal assets liability statement to banks. Usefulness of the insolvency. These document assist RP and creditors in initiating the proceedings against the personal guarantor before NCLT, tracing the personal assets, immovable property, investments, bank deposits. Some of the people, they mention, I'm having securities this much. First, you get the demat account. In the demat account statement also, how many the securities still it is there. Shares are there. detecting the concealment of diversion of funds to the personal accounts. Such information becomes crucial in proceedings under Part 3 of the IBC relating to the personal guarantee. Simply executing PGT-CD is not the criteria. First, get the full information at the time of sanction the loan or enhancement of the loan. What is security, what assets he has declared, that information you collected. At that time, he will tell honestly, sir, this much, that much, this amount is nothing for me. Insurance policies covering primary security and collateral security. Sir, before once you are reported as an IRP or RP, all assets are properly insured or not. Ensure to insure. Otherwise, we are accountable for that. We have to pay the damages or claims. Particularly in case of pharma, whatever the licenses are there. In case of listing companies, that is compulsory. In case of stocks are there, stocks are to be properly insured for various risks. Once the insurance policy is not there, if any losses are happened on account of fire, then we are answerable for the negligence of our duties. Sir, I don't know, sir. I have reported only 1 week back. No. Call the CFO. Call the accounts. How many insurance policies are due? Renew that one. So, if at all it is a going concern, the health insurance policies, if at all it is there, that is to be continued. Otherwise, the litigations will increase. The insurance policies, primary and collateral security, plant and machinery. If at all a shock is there, or earthquake is there, or tsunami is there, or the buildings are washed out on account of the tsunami, why you have not insured? So that insurance policies, all assets. Because whatever the assets are there, all assets are to be properly insured about the actual value or market value, whichever is higher. Whichever is higher. Otherwise, average clause come into the picture. Banks mandate insurance coverage for secured assets, plant and machinery. Once I am given the loan, every year I will ensure whether plant and machinery is insured or not. Then I have to enter into my computer system, that is core banking system. Buildings for earthquake or floods or tsunami. Inventory for fire, theft or burglary or any other calamities. Vehicles, comprehensive insurance. Whatever the vehicles are there, whether it is a transport vehicles or buses to carry the employees or any office cars are there, comprehensive, own damage plus a third party. And pledged or hypothecated goods. Compulsory. Even in case of the pharma companies, whatever the licenses are there, that is otherwise we should not manufacture that particular product. Not only that one, pollution control board. Every year the pollution control board should be renewed. If not renewed and the production is started, then they will impose a penalty that is to be borne by the IP, the IRP or RP. It is not part of the CIRP process cost. CIRP and liquidation relevance. The insurance or this one. Insurance policies help in protecting the value of the assets during the moratorium period. Whether it is a 180 or 270 or 330 till the finalization of a successful resolution applicant, enabling claims in fire, theft, flood, or accidental damage. Determining whether insurance policies were paid and the policies remained valid or not. That we have to look into. If insured or suffer the damage during CIRP, the RPR liquidator can lodge claims to preserve the value for the creditors. During your tenure, once the company is going concern, or normally if at all the company is not running, the assets are to be protected, means security to be engaged. Next, fire extinguishers are to be established in stocks and smoke detectors. Otherwise, it is a deficiency of your duties, your functions. This is particularly important for assets that are perishable and vulnerable to environmental risks. Environmental pollution certificate. This is also important. The corporate borrowers and manufacturing sectors are required to obtain environmental clearance, operational consent from state pollution or control pollution as a central pollution control board and state pollution board. That is also required. Once I am operating this, that's why banks, whenever I am given a loan to the company, if they are not renewing the pollution control board, I don't renew, they continue the loan, I will call up the advance. Call up means pay back because you have not fulfilled the terms and conditions. Importance is here. This certificate indicate whether the plant is operating legally, whether the environmental liabilities are exist, or whether the operation can be continued as a going concern during the CIRP. If a pollution control approvals are lapsed, resolution applicants may factor complaints cost into their bids, affecting enterprise valuation. The buildings, the vehicles, the stocks, the plant and machinery. If the health insurance offered by the company to the employees, that too, that is also. So till you are handing over the company to the successful resolution applicant, these are very much required. Listing agreement, stock exchange compliance record, that is also required. Once it is you have to renew the listing agreement with the Securities Exchange Board of India or BSC or NSC like that. When the corporate debtor is a listing company, financial collect copies of listing agreement and the corporate governance filing submitted to the stock exchange such as Bombay Stock Exchange or National Stock Exchange. And utility in CIRP. These records are provided, particularly disclosures of related party transaction, corporate governance compliance report, and shareholding pattern of a promoter's holding, and material event disclosure under listing regulations. Such information assist in resolution professional. Identify the connected parties under Section 29A, or tracing the promoter's share pledges, or detecting undisclosed liabilities or litigations. Share pledge encumbrance information. Promoters often pledge their shares to secure loans. Stock exchange filing contain the detailed records of such pledges. This helps RP identify whether lenders hold security over promoters' shareholdings or not. understanding the possibility and enforcing the share pledges during insolvency, and assist the promoter control the voting rights. Insurance settlement in favor of the financial creditors. So here, whenever the insurance policies are there, the insurance assignments in favor of the financial creditors. So you have to change that one. We have to change that one. Once any claims are there, the claims are directly credited to the loan account of the bank. So whatever the assignments are there, particularly, suppose that take for example, for stocks, the company has the bank has taken a insurance policy against fire, theft, burglary, and etc. So in the insurance policy, they mention hypothecated to State Bank of India like that. Once the stocks are burned, then automatically the claim will be finalized and credit to the loan account. During CIRP, that is not correct. So you have to remove that assignment also. Insurance policy typically assigned to the banks as a loss pays. This assignment is a critical because it ensures the insurance process directly payable to the security creditors. It prevents the diversion of insurance claims by the promoters. During liquidation, this assignment strengthens the secured creditors' right over the insurance proceeds. So here it is better that the assignment is to be removed. Environmental liabilities and the contingent liability claims. Pollution control records also indicate pending environmental litigations. Whatever the pollution related issues are there, that is to be resolved. Otherwise, it leads to claims also. Penalties imposed by the environmental authorities. Remediation obligation. Such liabilities are treated as operational rates and must be reflected in the information prepared by the resolution profession. And use the guarantor's net worth in resolution plan evaluation. Guarantor's net worth. Resolution applicant in COC examines the guarantor financial strength to decide whether guarantees should be invoked, whether settlement proposal from guarantors are credible, whether restructuring proposal backed by guarantee funding are viable. This ensured inform the commercial decision making by the COC. So this issue also to be taken care of by the COC. Role of avoidance and fraud investigation. Personal asset disclosure submitted to banks at the time of loan sanction provided a baseline. By comparing these current assets position, the RP can get a transfer of the personal asset to relatives, benami transaction, undervalued property transaction. This supports the applicant fraudulent transaction related to Prevention of Money Laundering Act 2002 wherever applicable. Assistance of the going concern operation during CIRP. Environmental approvals, insurance coverage, regulatory registrations essential for keeping CD as a going concern. The factory licenses are to be renewed. So as a bankers, we are always insisting all these things before the renewing or enhancing the loan. Pollution controls are consents are there or not. Fire and safety insurances are there or not. Otherwise, my loan amount may not be recovered. The RP has forced to suspend operation, leading to value erosion. Therefore, access to this document enables continuing planning also. That is also possible. Role of liquidation of assets, due diligence. Prospective buyers in the liquidation requires proof of title, encumbrance, environmental compliance status, insurance history, clarity of the guarantor's liability. Even insurance policy also helps a lot in the CIRP process. Suppose the stocks are there. Stocks are recently on stocks, the insurance policy taken. The sum insured mentioned, sum insured stocks they have mentioned, value of the stocks they have mentioned. But the stocks are not there in the stores. So then it is a fraudulent transaction. It is a fraudulent transaction. So all these things, the connectivity is there. Connectivity, the stock statement, the insurance policy, the connectivity is there. So the loan amount, the insurance policy, the physical stocks of the stocks, physical stocks to be equal. That's why banks, whenever the insurance policy taken, the actual value of the stock or 1%, 110% of the loan amount, whichever is higher, we will take. So to some extent, if anything happens, the insurance policy will protect. Otherwise, further loss will increase like anything. Further loss will increase like anything. Cross proceedings against guarantors. IBC allows a simultaneous subsequent proceeding against the personal guarantor of corporate debtor. The document maintained by the financial creditor becomes the primary evidence, the deed of guarantee. How you are proceeding against a personal guarantor? Personal guarantor to corporate debtor, how you are proceeding? Once the deed of guarantee is there, in case the company is failed, I am paying that amount. I am ready to pay the amount. That guarantee, deed of guarantee, the deed of guarantee is also under limited, covered under Limitation Act. If there is no deed of guarantee and the directors are not given any personal guarantee for the failure of the company loans, there is no question of a personal guarantor to corporate debtor. Once the deed of guarantee is given, then only the PG to CD or corporate guarantor will come into the picture. Otherwise, no. The document maintained by the financial creditor become the primary evidence. Such proceedings enable the faster admission of the cases, determination of the liabilities, regulatory compliance, and disclosure obligations. For listed company stock exchange disclosures serve the independent, publicly verified source of information. These disclosures help the RP cross-check the information provided by the management, thereby reducing the reliance on potential manipulated in the internal records. So here, the information is available, even though the company is not functioning, management is not supporting. But if at all you want to restructure the information, restructure the financial statement in one way or other, sources are available to fulfill the information gaps. And most of the information is available with the financial overall impact of the CIRP efficiency. Collectively, these additional documents help in faster preparation of information memorandum. Improved claim verification, definitely it improves the claim information. Enhance the recovery through insurance and guarantees. Reduction in litigation arising from the incomplete disclosures. They act as a risk mitigation. Tools and value preservation during the insolvency proceedings. So, whatever the information, some of the people, few people, they're always thinking about CIRP means only whatever the assets, whatever the liabilities, jot down and handing over the company to the prospective resolution applicant. Beyond that, so many things are there. Whatever your claims are received, whatever the liabilities are mentioned in the balance sheet, whether it tallies or not, and whatever the claims they have mentioned, whether the proofs are enclosed, whether the books of the records of the corporate data is available to cross-check that one or not. So this is the process is a particularly verification of a different papers are also required. The papers are also available one way or other. But today what is happening on account of the computerization? Most of the documents are in the system, IT system, computer system on digitalized. So you can extract even information utility also, you can extract some information on financial creditor, not the operational creditor like that. Net worth statement of the guarantor, personal guarantor, insurance policies, pollution control approvals, stock exchange, compliance records, though often viewed as a peripheral document during loan signing, become strategically significant once insolvency proceedings. All these things we are taking at the time of giving the loan to the borrower, to the corporate data. But definitely some good results will happen during the CIRP or liquidation. They enable IRP or RP or liquidator to obtain a holistic understanding of the corporate data, legal, financial, environmental, governance position, thereby facilitating a transparent, efficient and value maximizing resolution or liquidation process. So thereby, whatever the statements, whatever the registers, whatever the audit reports, one way or other, it helps a lot to the IRPR. A bird in hand is better than two in bush. That is a proverb. Once your financial creditor is with you in the COC, that too you are interacting with him. What is the problem in extracting that information from him first? If it is not available, then you go for others. That's why I told a bird in hand is better than two in bush. The first hand information is available with the financial creditor. Earlier, the DRT or now to IBC is a legally or process some 20 to 30% difference is there. But more or less one and the same. Debt recovery tribunal or the CIRP, 30% difference may be there. But during that DRT also, without appointment of any IRP or RP, we used to handle the information with us and even a surface also. We are handling the case by the bankers with the help of legal experts and valuers as appointed by the bankers. But when compared to the surface or DRT, lot of additional functions are there in the CIRP process under IBC for quick completion of this one. This is in brief about what I wish to tell about the various important documents that are useful to the IRP or RP. The documents are available or information is available through the financial creditors. Who is with you? You are interacting with daily with them. Okay, COC meetings may be the fortnightly or weekly or monthly as per your the requirement, etc. Once you call them, they will, sir, you please send the boy. We will provide the Xerox copies of the information as requested by you. That is the information. If information retrieval is also very, very important. If at all you are telling no information is available, I am in dark, how to move forward, and this IBC is a difficult one, means nobody will come into your rescue. So that's why the strategically you have to collect the information from various sources. One of such sources, your financial creditor, who is the member of the particular COC, who will provide only a request through call, which is an authenticated one, to fill up the gaps. That information, whatever the gaps in the information is there, that gaps can be filled up with the financial creditors information. Big folders, big files are available, and with the flaps are also available. From the day one of the sanctioning of the loan, and while submitting the case with the NCLT, the total box files, 2 or 3, are available for each and every the borrower of the banks. So that's why please use this information when you require some information. Only few information I am reiterating. The insurance policies. How many insurance policies you have taken? In the COC meeting itself, you ask the same. Next, can I have the earlier valuation reports that are completed by the bank? And can I have the appraisal to prepare the information memorandum? Or whatever the latest before CIRP commencement date, whatever the audited financial statement submitted by the borrower, can I have the copy? Or before insolvency commencement date, the last when the corporate debtor has submitted the particular stock statement, all particulars, major information is available. Definitely some comfort will be there, leverage will be there to the IRP or RP or liquidator. Once he is closely monitoring what information is available with him. Once or twice, if you scan the document, the borrower's folders or files, definitely, yeah, this document is required. Sir, can I have the Xerox of this paper is required? Can I have this one, like that? So this is in brief about what I wish to tell. Thank you very much for giving me an opportunity to discuss about the topic. And thank you to ICSI AIP also for giving an opportunity to this one. And if at all any clarifications are there, we will discuss. And the PPT already shared to Madam. She will circulate it to all the people now itself, I think. Sir, any doubts, sir?
So that insurance policy assignment part, couldn't get it. Like insurance policy, if it is assigned, that assignment has to be cancelled, that thing.
That is possible, sir, because once the order is there, now the all assets are under your control, not under the control of the bank, not under the control of the secured creditor. Okay, if at all under your control, simply the policy copy that a particular NCLT order assign. Sir, why you are the once you reported, why you are informing to ROC? Now all financial statements are to be signed by me only. Then, in the similar manner, once you are the taking take over that particular company, immediately you are going to issue one letter to the banker. Don't pay the any checks issued by earlier director. Now onwards, whatever the checks issued by me, please honor like that. Once you are giving such type of restrictions to the financial institution and they are modifying that instructions, what is the problem in insurance policies? Sir, some any doubts, sir? Okay, if there is no doubts, I will close this one. And thank you very much, sir. Thank you very much, madam. And
Thank you.
okay. Thank you very much to ICSI IPA also, IAP also.
Thank you, ji. Thank you, sir. Thank you very much.
Thanks.